Okay, hi Pete. Hope you're well, mate. As we'll get up and running in just a moment. So we'll be getting a few people in a bit late. So the markets are a tad choppy today. Interesting to watch. I mean, if you're watching the intraday stuff at all, it's yeah, they're sweeping both sides of the market at the moment. The Nikkei I thought was going to go out, it didn't go anywhere, so it got out of that. Happened to pick the high on the Hang Seng just before we had a pullback. It's probably taken off again. It's still hanging in there. So I thought that would extend, and you see it just getting stop, 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 and then pull back, flushed out, and then probably away you go. Some bit of strength in that Hang Seng too, off the open, which is didn't expect that. So aim of the game, keep your biases on the sidelines. All right, so who we got in? All right, we'll just get started. We'll rip into it. So today we're just going to go over. I mean, there's not much more to talk about, to be honest. With the markets, we're still sitting around waiting for a stimulus from the US or the next round of stimulus. They still can't come to some agreement. I think it's all getting put on hold. I think it's just, I don't think, Daniel, I don't think they are, Trump is too keen on handing out more free money. I think he believes that, well, obviously, probably a good point too, that people are more willing to take the money and not work than actually get back to work, the way everything is at the moment. And plus, you know, I think considering that they've still got a bit of an issue over there. Everyone's just sort of waiting for that stimulus, which may not come. I've got a feeling he's just putting it on, deflecting and delaying and all these sorts of things until he basically gets what he wants. If we can spit that out. Hey, Robin, Robin, Mike. There you go, Robin. So to me, and he's delaying coming up into the elections too. All these issues with what is it, the mail, postal service that now there's stuff about going through courts or something like that, so he can't delay, he can't close it down or whatever they're doing. So there's all these issues there. So sooner or later, the market's got to sit there and think, well, what's happening? Are we going to get the stimulus, which we've already factored in? The US dollar's factored in. A lot of people, markets are generally factoring in that stimulus. If we start to come to the point where it's not coming, anyone who's going to add risk to the market, you've got to be crazy if you think it's not coming and you're buying it at these highs when you've got massive unemployment, all these sorts of issues. Um, is that going to be the last bout of stimulus? Do we have to refactor in so maybe a bounce in the US dollar, which is going to hurt everything in reverse? Equity markets sell off because, I mean, if you're sitting up here waiting for stimulus, you've already factored in another $1 trillion. Maybe you're not even going to get anywhere near that. Maybe it's going to be delayed for a lot longer. I mean, he's got good tactics, old Trump. Rather than say yes or no, he'll just delay it because then it leaves everyone sort of in a holding pattern. And you can see that in the markets. A lot of these markets, I mean, go and look at, which we'll look at in a minute, copper. Copper, second time it's been sold off hard and it's bounced straight back again. So there's no commitment from the sellers to really edge it lower, or there's no real reason just yet for longer term buyers to be forced out of the market because nothing has really changed. So it's an interesting one. Let me just go over here. Let's just get copper up while we're talking about it. So I thought what I would talk about today is just we'll recap a lot of these markets on the 5-minute chart. Let's go to a 30-minute. So you can see that was the previous sell-off, and we bounced straight back again, even took out some of these lower highs just to sweep people out of the market because that would have been, selling opportunity, built a higher low in here, bang, sweep them straight back out, fell apart again. So that is not a weak or a strong market. You do not hold a lower high and then sweep the top out, take out the highs and then turn around straight back through those lower highs and even take out this low and then turn around, bounce straight back again. That's an uncertain market. That's market that's got no commitment to the selling pressure. So anyone selling is not going to commit down at those lows to go into new lows. It goes into new lows, they're quick to buy it back. Anyone who's got their short has got their finger ready and poised over that buy button to dive straight back out again if they find any reason that it's not going to follow through, which it hasn't. This was a good little sell-off. You got this chopping through here, sold off straight back again. Even any of this action, that's choppy action, which you would expect up near the highs. Bit of a flush straight back again, so there's no weakness. I mean, you can see that's a flushed out. There's going to be people that are going to get squeezed out because it's been, you know, trending higher for so long. All this sort of this move up here. So when you get the market goes sideways here, the latecomers are going to be nervous. You're either going to get stopped out for a loss, a small gain, or break even, or something like that. So you're talking about the latecomers to that trend, potentially, anyone that bought it up and that rally just started to break up, put under pressure, swept them out. If they haven't got back out, they've been out. They've had a couple of times where their pressures really started to build, but it's bouncing back too hard for me to expect that it's going to get a run onto the downside. So everyone's waiting for stimulus. Everyone's just sitting around waiting for stimulus at the moment because the market has been, it might be a bit of, what do you call it, cold turkey on stimulus at the moment. Everyone's been so addicted to it. The market's bounced back so hard just because of the stimulus. There's no other reason. I mean, fundamentally, no reason why these stocks are getting overvalued, maybe, especially in the US, well and truly overvalued. You got a big bubble in tech stocks. Whether, that's finished, who knows? I'm not, so don't get me wrong, I'm not being bearish as such. I'm looking at the risk side of it. So always look at the risk. If you're long and it's going up, you don't care. You've got nothing to do. If it's long and you think it's extended, where are you going to be forced out and what are you going to be looking for? So you're not going to sit there. You're not going to sit around just waiting to make new highs because you turn yourself into a bull. It's easy. My mindset, I'm less risk adverse, I guess, or more risk, or whatever you want to say, less or more risk adverse. So I don't like to dive into a position and try to be, I'm not bullish or bearish. I'm always looking for the door and what's going to cause me to run for the door, run for cover. If I don't see what I expect, there's reasons for that. If I, for instance, when we're looking at this, where is it? Let me just find you what I was talking about. Hang Seng. That's not it either, is it? Here we go. The Nikkei. So I was looking for this sell-off. We're down at support. We sort of grind our way back up, started to sell off here, got short, looked like a shoulder. As soon as we got to this candle here, you'll see that's not very good. This candle here, this green candle, took out the lows and it was starting to go back up again. It was starting to look like it was going to hold that level. So what I'm saying is being risk adverse, I know what I want to see. And if this market's going to be weak, that you should not have got that green candle there. You should have taken out that low and kept going. We should have been down at, 2380, for example, down at this support zone without really too much trouble. But because it's not weak and you're getting sellers that are not that committed, or you get maybe retail sellers or anyone probably like myself looking for that short, that extension through that zone, that support zone, and take out some of those stops, it just didn't happen. So you've got to realize when you're wrong, okay? And that's what I mean by, it's not bullish or bearish, it's just recognizing the signs nice and early. So anytime you take a loss, you're minimizing it as best you can because profits come, when they do come, they come generally pretty easy. Right? You don't really have to work for them. If you've done the research, you're buying off your, say for instance, you're looking to sell in here, you got your shoulder, you sold it. It capitulates. So what you thought was going to happen happens. It plays out quite easy, and it's not much of a, there's not much trouble in taking those profits when you're right. But you've got to recognize sometimes it takes a bit more time, obviously. But you've got to recognize when the picture's starting to change, and you could be wrong, and you might get tagged on your stops. All right. So that's what I mean by looking at these markets. Okay, assessing. Is it just in a holding pattern? Are we starting to find some weakness? Nothing really is showing me any weakness just yet, but there's no one's really to commit to any more risk into the market because only going risk on because of stimulus. Stimulus is not coming down. They're mucking around. They should have agreed it to over a week ago, come to some sort of terms. No one's willing to meet in the middle, either the Democrats or the Republicans, not willing to meet in the middle. They both say they are, but they're not. Otherwise, they'll be saying, okay, let's do that. Let's do something here. Let's at least give some support to the markets. There's still high unemployment, still people sitting on unemployment benefits, and there's still corporate default in the US, which you don't really hear much about, I don't think. Anyway, but I know there is companies over there that are going broke, they're shutting down, they're struggling for all manner of reasons. What's happened with all this, I wouldn't say violent, well, it is violence, isn't it? Or everyone's wrecking the joint in the US. There's a lot of reasons why to sell. It's just that it's been supported by stimulus. Now, if that doesn't come, or if we think we're going to get less than what we should, then I can't see why this market wants to hold up why it will hold up. Maybe it's just the elections. Everyone's waiting to see with elections. People are saying is that Biden is not a shoo-in, but he's leading the race. I mean, last time I thought Trump wouldn't win, and the whole market was, every time there was talk of him winning, it was going down. It was getting sold off hard. It was getting smashed. Then Hillary would start leading the market, start to rally. Then Trump would come out, and there was talk of him winning a few more seats, and it's getting closer. He's got the potential to win, and the market was getting hammered. As soon as he did win, that was the low. That was it. The market just took off. So it's kind of a bit of a setup, I guess, at that stage. So maybe the market's doing a bit of the same. I mean, we're just sort of waiting at these highs. I mean, who knows? Just waiting around for elections. Stimulus doesn't come. Everything gets sort of put on hold until we get more direction, and we're going to get an easy market because of Trump. Or, if Biden gets in, what does that mean to the market? What does that mean to Wall Street? What does that mean to further stimulus? Maybe it doesn't mean anything. Maybe it does. I don't really keep up to date with all that, but I think there's a few things in the pipeline where it could knock the market on the head, or it could just send it for another rally. So I think just sitting here, looking for that cracks to appear or not. I mean, let's go through the S&P. I mean, for me, so we'll go to a daily chart. I think we're just going to focus on the daily charts. We're up at the all-time highs. I think we just touched into the new all-time highs, if I'm right or wrong. I think recent last few days. Maybe we did, maybe we traded that, but either way, that market is not selling off. There is no reason. It's still a straight V line, for the highs. And we're not even here, we're not even really pulling back. You got this sort of, it's not a pullback, it's sideways up, sideways up. We could expect another sideways action here around the highs and then break into new all-time highs when you got all these issues that are playing out. Again, I think that's going to be to do with stimulus. And at the moment, it's not coming through. Look at the Dow. Dow, just that little sell-off there, green candle, red candle, green candle, that more like consolidation up at these highs. It's just pushed through this previous high at around 27,580, consolidating, ready to go. MAs are up. That longer-term MA, you start to see that starting to curl up. When it's changing green, it's positive, not fully positive. The market is a bit away from the MAs at the moment, but there's no reason why that can't extend up quite easily and take out and push into new all-time highs on the Dow as well. Now the Nasdaq has already done it. They've traded into new all-time highs a while back. They did it, I think it was back here, wasn't it? Yeah, a long time ago. Sell-off, just smashed through those highs, and it's just kept going. Again, there's no reason at all. There's been a few false starts. You've got, if you're trying to find some sort of support through here, maybe that's it there, but there's been a bit of a few flushes lower, being bought straight back up, flushes lower, straight back up. So if that theme continues, that's going to support the S&P and obviously the Dow as well. So no market in the US is showing signs of a break. We're not consolidating. We're not starting to form lower highs. It's just higher lows. We're heading higher in the face of all these fundamental problems or economic problems. DAX, look a little more skittish. And the same with the FTSE, a little bit more skittish here. It's been chopping around. It's been sort of stuck in this range for a while now, for probably a couple of weeks. That's since, so it was a big sell-off. It hasn't bounced back anywhere near what the US has. And we're starting to chop sideways. Maybe we're just flushing out a few of these lows, putting people back on the sidelines, and we start to rally again. Or maybe this is signs of some weakness. I think the US has got, all other markets can go up, down, and sideways. The US, forget about sideways. It's up or down for them. They either rally, and then they drop like a stone. There's no sort of a sideways consolidation in the US really, longer term anyway. So you got the DAX again. Like I said, it's starting to, maybe we're getting up to these highs and it's starting to feel a bit skittish. But either way, that it's still holding high lows. The most recent high low is down here, right? And that's holding the market up, holding the trend up. If we just take out these highs, we had another high low that's starting to build. Could hold slightly higher level. But either market, it's starting to get up towards these highs. It looks ready to go. I mean, it looks like it can continue on into those highs quite easily. This trend, the last few weeks, is up. Having a bit of a pullback the last few days into the end of last week, but basically it could be setting to go again. Crude oil, sort of demand base. It's not. It was looking like it was ready to pop up. I want to take this down a chart. Take it to a 2-hourly chart. The action, this press up through well above 40, so 43.5. sold off. It's chopping around here, but it's still, you can see it's holding higher levels and lower highs. So it's kind of coming to that point of agreement where you would expect some sort of action sooner or later. All right, and that could easily resolve itself to the upside or downside. If the market starts getting smashed in the US, then it's just going to pop down. But if it doesn't, it's going up. We look at the US dollar. US dollars, yeah, it's grinding down to those lows. We're selling off a bit more today, but nothing, nothing too much. Maybe this market, it's a bit of a setup. Maybe, we're factored in quite a bit of stimulus there, bit of a flush back up to these highs, found some resistance. So more, to me, it's more rangy than anything else. I don't see that positive or negative, and then there's argument for both a rally and another sell-off. Obviously, the sell-off being more stimulus. If it doesn't come, have we factored in? If we get half the amount of stimulus as as the market's expecting, how much of that have we factored in? We factored another trillion, we get half a trillion or 500 billion or something like that. Just say, maybe technically we should be bouncing because of how much has actually been factored in already. Or, if we do get that full, I don't know what package they're looking at, another $1 trillion or so, we could get that. Obviously, just going to get further continuation to the downside. We'll just have to see how it goes. I think if we don't get anything and they start to delay, there's going to be some sellers that might start to lock in a few profits. But either way, it's quite a wide range with this US dollar could bounce around here for the next couple of weeks, easily up until the elections in around November, isn't it? So yeah, we're lacking direction there, consolidating. We're lacking direction in a lot of these markets. Currencies are doing the same. Euro capped at the highs around 119, supporting around 117, 200-point range. Could easily just bounce around between there as the US dollar bounces around between highs and lows. And the Aussie, much the same. We've got probably a bigger zone up here. It sort of flushes out these highs. You can see this is not convincing when you take out the highs a little bit, flush straight back down, take out the highs a little bit, flush straight back down. You see these minor higher levels holding. So you've got all this action that's being capped a bit. So at the moment, everyone's sticking to the same plan. US dollar down, Aussie market up, equities are still holding up by the Aussie. By the euro, the US dollar's going down, we might bounce. Okay, we sell back down to take some profits up near the highs on the euro and the Aussie, and they head back down to the support zones, and the US dollar bounces. So we might get that sort of range bound action for quite a while until something comes out, or and people just give up on the equity market, and we start to see a big wave of selling, forcing that market down. So it's interesting times at the moment. I think I don't know if anyone remembers the GFC, the sell-off, the bounce started to get to a point where you just go, don't believe why it's bounced so hard after all this negativity, everything you hear in the news. And then, you've got to go with the flow. And then sure enough, it turns around and gets smashed again. Sort of out of the blue. And the markets were doing a bit of this. It was chopping around as we get this bounce, at sort of maybe to the tail end of a bounce into the market, start to chop around. Obviously, the US didn't come back quite as hard as we have recently. Can't remember if actually the sell-off was just as much or not. If anyone could help me out there, maybe percentage terms. No, won't worry about that too much. So what's everyone else's thoughts? I'm knowing with the indices, there's not as much momentum plays at this stage. I mean, looking at the Hang Seng, which we trade a bit, there's not as much momentum plays. The last few days as well, I think the market is happy to just sit and wait at this stage. So this is the Hang Seng. We're getting, just sort of push up out of the blue, but longer term, there's this chop around between the lows, and you can see the market started to pick up here and bang straight back down. I think it was the other night. You just sort of flush up the highs, straight back down, but getting supported here, and then rally back up, straight back down, bouncing off support, just sweeping out these lows with this move, turns around, sweeps at the highs, straight back down to the lows. So, it is choppy. We're taking out lower highs and higher lows. It's sort of sweeping both sides of the market, and that's in search of liquidity or in search. The market's still looking for a direction where it's not getting at the moment. So whether we sit up here and we chop around here, and then later on coming to the European session, we're straight back down to where it opened today at around this level, 25,242. So like I said, there's not that momentum play where you can pick a good little zone where you can build a higher low off, and you're going to get a good run on. It's going to be momentum up or momentum down. It's more of that range bound chop. If we get into a 30-minute chart, So I'll drop that down. You can see we had a good little expansion higher, but all this chop around here, we're starting to get back up to this high. We might trade back up there. Don't know why that doubles up all the time, but it does. I think, expectations we get this through this high at 25,463, we're going to trade up to here, but that's quite a big extension from the open. So I think we just flush this high. We might finish back below that range today, maybe trade back into the European session. Europe might be negative when they open, and we head back south again. But either way, the market, that actually looks bullish to me on the Hang Seng, but they've been coming down quite solidly. So yeah, the market hasn't, that's not picking direction just yet. If we can, the Hang Seng longer term, if we can pull back and build a high low we can work off, and it's quite a clear, distinct high low, then we're looking up to trade it through these highs. But again, it's going to depend on what the US does tonight, the next couple of days. Anyway, guys, anything you want to look at, chuck it into the chat, and we'll start getting into it. Gold, not looking too crash hot. So I'm just going to drink some cold coffee. There you go. So my thoughts on gold. Can't hit a shot. WGA will do. I'll look at it as AOLL. We'll look at that as well. So with gold, the way it's, everyone's talking it up. And that's the thing. When everyone's talking the same direction, I'm always suspect that it's not going to get smashed. It's just the nature of the beast. If everyone's loaded long, the easiest way is down generally, because people just get, stopped out, squeezed out. And if it comes back with flying colours, then it is a strong trend that's well established. But the fact that we got beaten down here a lot harder than what I thought, to be honest, smack down here and we bounce, but the bounce back has been a bit of a grind. Again, maybe there's just lacking a bit of commitment from some buyers, or from, if you bought it in here, sort of anywhere below here, you're still holding long. You might have bought it up here and you're holding long. Don't know why. You've got a very wide stop, or you're committed to these longs. That was a good washout. That's a good enough flush of this trend up. But longer term, it's come right from 1600 levels. Let's go to a daily. It's been a very good rally. Right off these lows at 12, it just kept ticking away. Big flush here, ticking away. Maybe we're going to get this section, this flush lower is something like that, and we're going to reset. We're miles away from the MA, so you're basically, when you're looking at that, you're further away from the MAs, but you're just getting stretched. And if you seriously can sit there and think that the market is well and truly stretched, that it's going to keep going higher and you're going to buy it there, you're just going to set yourself, I think, generally, with my experience, you're going to set yourself up for failure. You want to see some sort of correction. Sometimes, you might be looking at it here, your timing's off, all that sort of stuff. Or you're just taking entries with very tight risk, because you know that you sort of, probability-wise, it's like an elastic band, can only step so far before it has to come back in to sweep out a few, reset, and go again. So to buy up here, you're looking at that sort of extension. It's massive. So that pullback, whether we're going to get another lower high and we start to do a bit more of a sweep lower and just clean out, maybe back down to 1820 or thereabouts, could be another $100. Could easily be another $100. Flush them out, reset, maybe retest these lows over time and hold. I just don't think, even in here, when you look at down at lower time frame charts, back to the 30, that there's a lot of commitment from buyers here. Bounced here, which you're going to get. You're going to get that sharp bounce. Didn't really go anywhere. We took out this high by 49 up to 65. What's that? 15 bucks. Not a massive move. Took out this high by 15 bucks, and we've been grinding lower from there. So whether we're going to reset and we're going to start attacking these highs, it'll be a bit of a grind up. We're yet to see. All right, but I'm just not, the way it's sold off here, flushed out a lot of people. If it doesn't do anything soon, there might be a bit of a rollover again. And again, if the US dollar starts making a move to the upside, then expect that to roll. Another good thing, if you go and compare those two charts, what we've got here, gold on that side, we'll go to the dollar index. Both 30-minute charts, look at this action down with the US dollar. So you can see on the right-hand side, the US dollar sort of bounced up. Gold had actually gone up, then started to get sold off as the US dollar sort of pressing higher. And then gold kept finding seller pressure at lower highs as the US dollar is essentially going sideways. Then when we get to a point where it starts to get sold down quite heavily on the US dollar, gold's still continuing down. Now, the last few months or so, every time gold sells off, the US dollar selling off, gold's bouncing. Because it's just like the Aussie dollar, like euro, it's a US dollar based commodity. So weaker US dollar means higher gold prices essentially as a currency pair. So it was doing that, but on the weekend, on Friday, it kept finding, a bit of selling pressure, grinding down, holding lower highs, just taking out these lows as the US dollar got smacked down here. Now, if we do bounce, what could that mean? Maybe we're going to get a sharp move to the downside on gold because it just looks like with this kind of move down as the US dollar getting sold off, just a lack of commitment from buyers to jump back in without some, maybe the market's just expecting another flush. You want to flush lower, hold a key higher low, and then maybe we get another bounce back up to the highs into new highs. All right, so good jabbering on there. Let's just look at, got a couple of stocks to look at now. There's a couple, just starting to look at BPT. There's a couple of energy stocks, and what was the other one I was looking at? Can't remember. But BPT, potentially we put in a base around that 140. Let me just draw this up. So I'm just going to go up the drawing tool. So BPT is, there's a couple I've just got my eye on at the moment, so put them on your list if you want. We've got this zone that's held up through there, and you can see test, flush. I don't mind when it flushes out. You could say, and I'll just put out a video on the weekend, sorry, just to sidetrack. Buying off the levels, I've just heard a few people lately talk about, we're going to a support zone. It's traded there a couple of times. You're looking at this kind of action. Next time it goes down there, I'm going to just buy there. Now, if it's holding lower highs, it's a 50-50 game. If you just put in a buy limit as we're approaching that support, it's a 50-50 game. And this kind of thing, if you've got a tight stop, you buy at the support there, you get flushed out just on the other side, with stopped out on the other side before it bounces, and we start to build that high low. That's why I'm a big advocate to buying off high lows, because you don't know if it's going to pop down and start to drag all the way down. Because just because it's touched it 3 times doesn't mean that, you can look at it 2 different ways. There is buying strength there. It might drag in more buys, or because it's still holding lower highs into a zone, there's still some strong selling pressure, and are the buyers going to give up? So it's sort of an each way bet, 50-50. But when you get a higher low starting to build, especially after a flush like we just saw in here, sort of a spike lower, finished back up again on the day, and then we pop back out and we have another retest, so that sellers are starting to push it. They want to see if they can build another lower high. That wasn't just a washout, but we're actually going to, break down, and we start to trade down to 120 or back down to these lows at 90 cents a dollar. They give it a bit of a nudge there, and then buyers start to step in at higher levels at around that 140, 42, 43 zone off this higher low here. That there is more the entry you should be looking for, because you're starting to get, you always want to trade, if you're going to trade long, you want to trade with momentum. You want to trade when the market's starting to rise as early as possible. On the short side, you're trying to trade when the market, if we've had a good pullback, a rally, and you're trying to sell into the first lower high, shoulder, nice and early, but go with that momentum down. And that's what we're always trying to do. If you're just going to buy off a level like this, for example, when it hasn't confirmed either way, it could be an each way bet. We might just go bang straight up, straight down. You don't know. We might do the same thing again. Pushing to a level, you got long, okay, it's bounced again, and then slam through, go back up. At that stage, when it's coming there, you don't know which one's going to happen. But probability-wise, once you've gone through a level, at least, or you're bouncing and you start to build at a higher level, it's simple. It's evidence that buyers are stepping in at a higher level and they're willing to soak up the selling pressure, and then you buy on the breakup. So what I'm saying is, if you get a move down like that into support, comes back off, starts to build at a higher level, you want to get long off something like that, because that's a much higher probability setup entry criteria than buying straight on the level with a limit order. and the reverse in selling. So all in all, what I was saying here, that's a good example. If you did buy into that level, for example, maybe it worked here and you didn't go anywhere, it worked here, you're still in, you got stopped out, then bang, we're starting to head higher. So either way, what I'm looking at with BPT is that it's got a good candle today, starting to break up and out. So ideally, I'd be looking for first pullback, see what happens. We've just got this high low off that level, but that's a slightly different to once we start to break out to the upside, because you're still within this contraction zone. That high low, we could have easily gone straight down from there. Once you start to hold up and you break to the upside, it's a lot clearer what's happening. It's a lot clearer that the market's starting to find some buys. It's starting to pop up. And you just want to see what happens on the first pullback, whether they're going to be committed or it's just going to stop. Right, so that's a good one on BPT. PGH, I wouldn't mind seeing if from here, if it just does not go any lower, we're starting to bounce off the MAs. Have a couple of days where we consolidate around 220 and start to lift. 230 is looking good for an entry. And that's the same thing. We're holding through 2. This will be a high low once if you hold here and you start to break up to 3 through 230. I think that's a good little risk reward trade. Where's my little man? Here we go. And you'll see what I'm saying in a second. You've got the markets headed high. So we've got pullback, headed higher. The fact that we've pulled back and then we've consolidated right through here is a good little sign. If that was your 2 moves, we're starting to get weakness off this, especially off this level, bang, it should not have started to hold up. And sellers have had another crack at it here, another crack at it here. So you can see lower high, lower high, lower high, constantly supported. If we're just buying off those lows, I mean, yeah, look, it's probably working out now. But again, you don't want to buy off the high lows. So that's why I'm still just sitting around waiting. If you can see that MAs are coming in, it's contraction. When they start to expand, when they're expanding is what you ideally want to see. Say, for example, this pops up above the MAs, pull back, starting to expand, risk above, so entry above, risk below, carried on, didn't get too much further than that, but that's the kind of entry when your MAs are starting to point up, they're starting to expand on the upside, momentum's with you, you're buying on the rise rather than just buying into a pullback. But that's ideally how I like to attack from a trading perspective. So you can see, I'll just clear all that out. That there, as I'm looking at, support there starting to hold. We've got this lift. We know, okay, if you're a seller, you'd be, if you're in your right mind and you're a seller and you're looking at that and because you want to get out, you might have been long here anywhere, wherever you're long and you're still holding and you're thinking about selling, that one candle will change your mind, should change your mind. You should be sitting there thinking, well, let me just wait and see what's going to happen, because if we do break through that high at 230, it's probably going to bring in more buyers. So if you can say that to yourself, why not buy it at 230, for example? If we hold up here, if we start to head back down and retest that low, that's not so strong. It's not as much commitment from buyers, or we've got the flush up, but there's no more buyers behind it willing to throw their money in and lift price. So if we get that sort of move back down to 205, I'd be thinking twice about it. But if we can hold around here, so I've got this funny patch on my computer which stops drawing in the middle. Happens occasionally. So this is the lift, what we're talking about here, off that support. If we can just sit there and start to chop around here a bit, I don't mind. The longer it sort of holds that level, and if we start to lift, that means that level becomes a lot more important, because it's holding. There's always sellers. Every day there's more sellers looking to sell. It just gets soaked up. We start to lift, buy on the break, stop below, and see where it goes to. We could be moving up through 240. You've got in at say 232 or so. You've got a few cents up your sleeve, and then just see where it goes to from there. Which could mean getting through 240, you're looking back to 3. Next level across. So we'll see how that goes. Oh yeah. So the stop would just be, Joseph, it would be, as long as that, I wouldn't, like I said, if it pulls back down to here, I mean, I'll probably answer your question already, but if it pulls back down to here, from here, we don't get that green candle, finish today, tomorrow it sells off a bit more. If we get back down to 205, that's off the cards. This has to hold for me around 215. That needs to, because that will mean that's going to be a high low. Buy on the break, your stop's going to be below 215. So what, 20 cent stop on that? So you just got to adjust your quantities according to your risk. So that's what I'll be looking at for PGH. Bega, I like Bega longer term. This is one that I was chatting about on the talk recently. Did was it? I've got it somewhere. Spotty, it's called. So anyone take a look at that. I think Bega longer term looks quite good. So this is all that when we got that the beating. Go back to the day. This around here was when the market was selling off. Now look at Bega, essentially chopped around sideways. It was very whippy, but you can see that sell off there, bang, straight back again. All in March. I think the market was getting sold down, well, basically from the end of Feb through March. So end of Feb was here, got smacked down, straight back up again, and then it started to hold, consolidate. So someone was soaking up and protecting it around 4, which means the way it held there off these lows, it wasn't getting hit any harder, and we started to lift. This pullback means quite a bit. I think we're just coming back above the MAs here. I would like to see Bega hold above those MAs, chop around here, and then see if we can get an entry to go long and sort of front run the move through 5 and a move back to 540. By front running, I mean that we're anticipating off higher lows that it's going to expand back up to those previous highs around 540, even through, because the weekly does look very good. Look where the stochastics are. So anyone that doesn't know, stochastics is more like a strength barometer for me. When you get up to the overextend on the upside, it's buying strength. And that's where when it's extended like that, above 75, 80%, you're sort of saying, well, buyers have used up all their strength. They're getting to the end of a move. They're going to start to give up when it's up at that overextended or overbought zone is what you want to say. So where is the most recent price action in accordance to where it was previously when it was overbought? And the same on the downside. So if we're looking at this, last time it was oversold, coming to the end of last year, the prices were down around 350, right? Forgetting about this little pop down, but around 350, headed down, oversold, we're trending down. All of a sudden, we're starting to hold up. We're getting oversold. So the sellers are given a good nudge. They're really trying to push it, but we're at a higher level around 450, 440 mark. So that's what I mean by a barometer. So they've given it a good push. Sellers are trying to push it down, but if it's not getting down to previous level, it's because buyers are stepping in at higher levels. It's as simple as that. So sooner or later, when you get sort of that overextended level on the downside, sellers are going to run out of steam. And if we've got a good sign that buyers are stepping at this higher level, are protecting a higher level off 350, $1 higher roughly, it's going to lift again. And you would expect it to go through 550 in the longer term, potentially up towards maybe back up to these highs, especially the way, after the way it reacted in March. So it's looking, to me, that's looking fairly good longer term. It just needs to set up. So what do we have? Where am I typing? OLL. Open learning. So really that action is just sideways for now, isn't it? To me, I would not want to see it go back down through 22. I want to see it to start to lift. And with these sorts of stocks, with only done 100 grand, 21 million, very, very small, I would want to see that hold above 22. I don't want to see it trade back down to 21. I want to see it hold at a slightly higher level and come in with some volume and not lift through 24, 25. If we get that, we might get another expansion high, because it is expanding high, then it's grinding back down. Get this bit of a lift, grinding back down again. So the way you can see that it's coming back down, not so much here, because it's off this low, you got that expansion back up. So it was looking good there. Run up, pull back, big flush, and you would expect that. I think it just started. That's all the data, isn't it? Yep. So right back on, what date's that? 12th of December, it kicked off. So you got the IPO, if it is an IPO, floated, come on, don't know what the opening price was. Anyone that's holding wanted a quick gain, take some profits from the IPO, took it up here, it's got flushed back out. So you're going to do that a lot. So anyone that's the weak hands basically flushed out, they booked their gains, they're on to the next one. All right. So when you get the market start to grind higher, anyone that's sort of the weak hands that start to get squeezed out and the market starts to press down. Okay. Anyone that wanted that gain, but they were shooting for the moon, it's probably the greedy people. When you get this sort of move down, it takes out these lows, that might squeeze a few out. Another reaction back up, it started to hold. But the fact that we held off this higher level was, it was good, but we didn't really get through this previous high. Is starting to bring in a bit of uncertainty in the market. But that is, again, don't forget, after March, that big sell-off in March, that would have squeezed a few people out, bounced back quite nicely, held in here. This high up here should have really a really strong market if it was a quality, everyone wanted a piece of the action, that should have gone back up to the highs, in my opinion. Then we rejected that zone again. So the fact that we're getting back up here, that's sort of the most recent level where, in everyone's opinion, well, not everyone's opinion, but that's could be, if we start to spike again, we're going to get about another bout of profit taking. So you'd be watching that pretty closely. Any weakness off there, I think third time or fourth time around, you're going to get some selling back off it again. But you want to see the fact that we've held this level, inside level. You want to see high lows hold, because it's a good sign that sort of those accumulation, it keeps going, holding. And if we start getting that high lows holding, sooner or later, that you would expect high lows pushing into this zone, it's going to start bringing, if people are holding, they're going to start thinking, well, maybe I'll hold it to see if we can break through that zone. And if we do, I could be on for young and old, and I would expect to get up through 38 and start to build some momentum to the upside. But for me, you can see from basically March, April, it's been sideways, sort of a wider range between 18 and 30. So we'll see how we go on that. WGO. Well, I'll get out of that. Orengo Energy 187, so it's a smaller one too. Done a bit of volume today. One good thing that's on the rise. Look at this little, kick up in volume the last few weeks or so on a daily chart there. Just drilling on that. That's quite good. You got this move down, volume flattened out, sold off, in March, sold down, but relatively light volume. Then we got volume starting to step back in here as we're holding above the MA. So it's getting supported right through here, and we started to lift again. So taking it from low to high, if this is the leg up, you went sideways, you're looking for another leg up from about 8 cents to 18, 10 cents to about 26 or so. So it takes us back into this high where we might have a bit of a problem. So that's just that 10-cent move from that low to high is about a 10% move. If you take it from about 16 to 26, 10-cent move again, expansion is second leg up, takes you back into this high. Now that's where you might find shorter term traders booking gains, getting out, running for cover. Just have to see how the market starts to react at that level. If it goes straight through, forget about it, and you're looking back up towards 40. But either way, it's at this stage it's starting to rise. You're on the right side. If you got in long, working off the MAs, we might be due for a bit of a flush of some of these late buyers, just to clean out a few, hold another high low, and go again. But either way, it's in the right direction. Qantas. Before I bag this too much, let's have a drink of coffee again. Okay. Joseph Richard Buckland. Is that for, was it OLL? OLL. So Qantas, for me, is too much. I couldn't buy that. I mean, look, it truly extended on the upside, come from oversold to overbought. You don't get much more overbought than that. And we rallied from 325, about 50-cent rally, as opposed to this time, you go from oversold. You can see mouse back then, we're oversold here, gone back to overbought. We've rallied from 325 up to 5. All right, so I think it maybe, this could be a bit of a line in the sand. It might take some time above 3. Might be a bit of a line in the sand for buyers. They're willing to hold it off there. You wouldn't expect Qantas's, problems for a long time, but they're Qantas, high debt, aren't they? High out in oil, high debt companies or businesses. Obviously, repayments a bit lower, whether they're going to get helped out on the debt side of things. But when you've got no income coming through either, or very minimal income compared to the outlay, I just find that I can't see upside in the near term. Again, if you're going to see the upside, it's a kind of the stock where it's quite big. It's not just going to, it wouldn't expect this to go bang, take off, right? You wouldn't expect that in reverse, where it's just going to go bang, straight up. I think you might get many chances of high lows to work off the MAs, something like this, bounce off the MAs, and the story's looking a lot brighter. But I think that's going to be news driven. Once they start finding some support, you want to see it pushing back above the MAs, not like this, got a bit ahead of itself there, and that's it. Anyone, because it's Qantas, everyone loves Qantas. It's cheap, we'll buy it. They bought it there, now they're underwater again. Or you bought it through here and you're about break even. So I would rather see that build. And if it's going to build off around 325, great. But you want to see it back above the MAs and then start to hold above the MAs, consolidate, maybe another run up. But you want to see it over time build and build. Otherwise, if you're going to buy it for the first bounce off the MAs, you might get something like that. Great for a while, then boom, straight back down again. But longer term, what's in the weekly look like? Yeah, that's not so nice, is it? I don't think that any of those problems, the reason why I got sold off has been sorted out yet. With the second wave, yeah, it's not looking so good in the near term for Qantas. So I wouldn't expect anyway. So it's not something I'd ever go and buy just yet. So that $3 bit more important. It's flushed it out here, flushed out, from way back in 2016, and we've reclaimed that level back above 3. But you want to see it do some more work to convince you, not just you, but everyone else that, okay, it's finding support. Okay, maybe we found its lows. We're starting to build. There's some good upside on that still from 3 back up potentially. You'd be looking to 7, double your money at least. So that's what you probably want to see the market start to build, that to convince people that, okay, it's worth buying. But at the moment, there's no convincing there, and there's no story to go behind it either, in my opinion. Qantas, PGH, talked about OWL. Okay, we've gone through it. On WX, sorry, Pete. That's one. No, it's not one I was looking at. Longer term, it's sideways here, isn't it? We had that with this little pop up. I think we got in here, pretty much picked a high of that swing, stopped back out as gold sold off. So I think obviously if gold starts to look like it's going to lift again, we might find some support in here. But the same token, look at that strong resistance through there that it just is struggling with. And it's a specky one, isn't it? It's not a producer. Look at that. This flush up here after retest, fail, retest up here, fail miserably. Obviously, bear in mind that if that wasn't March or big sell-off, you probably would have bounced off these lows. More rangy. So if you sort of discount this move, more rangy. Holding through here to potentially holding in here. So you'd want to see it hold in there. The way we had that run up there, and that sort of correction lower, I'm not a fan of, because if you get through a high and it's positive, it should be supported to the top third. So anytime we're looking, say that's the previous leg up, when you go to a pullback, split that in thirds as a general rule of thumb. Split that in thirds. Top third, pullback and staying within the top third, strong. That's a strong prospects. Holding, and you know that next move up is going to be quite strong. Get somewhere between the, around 50% with that second third. We get a pullback in that second third. That move up may have run out of steam. We might be seeing the end of it. Does that make sense? So maybe the secondary move up is not quite as strong because the market hasn't got as much momentum. We washed out quite a bit of momentum with this push up and that pullback. The deeper the pullback, you attribute a bit more weakness to it. Now, if you pull back in that sort of bottom third, forget about it. Generally, you don't really want to see that because that rally, anyone who's bought it up there has been cleaned back out and they're not willing to hold and no one's willing to support it on the way down. All right, so if that's the case, majority of people are not willing to jump in, then why would you want to buy it? Okay, so that's this sort of move up here. We've come right back down to test these lows. It's more like that sort of retracement straight back down to this low that we were just talking about, which is basically here. So you want to see if that's the case. Okay, I'm not convinced that I would want to buy it right here. Just sit on the bid there and buy it because it can easily turn around and smash straight through. And then you're looking back down, especially if gold starts to turn. Imagine if gold sold off quite hard. Again, you get a second wave of selling. Forget about seeing the highs at 260. You'd be looking to, potentially short it. So for me, when you get this kind of move back down again, I want to see more constructive off support zone. I want to see something that's going to hold. Show me over time that it's going to start to hold and maybe get a higher low to work from. But you need that time factor added in, not just buying it on the first pullback because you're coming into 210 and it started to bounce off 210. You've drawn a line there. I don't want to sound rude, but just because you're drawing a line there doesn't mean it's actually real. It's actually going to hold. You need to be convinced that that is the right level to work off. Okay, and that's what it goes back to what I was saying before about going on the bid at a level. If you're looking for a pullback into there, just going, say we're pulling back into that zone, we're about here. We're about here. I'll put my bid just in there because, I've drawn a line there. Essentially, that's what you're saying. I've drawn a line there. I'm so smart that that should hold there. Okay, that's not trading. You want to see confirmation. Whether you drop it down a time frame, which I don't know whether people do or not, but if this is a daily, you might look at the half an hour chart to see how it reacts. And if you're seeing sort of spikes on the half an hour, which don't really show up on the daily or at all, but on that half an hour chart, you've seen a reaction up, then okay, there is some interest from buyers there. So okay, maybe I've got the line right. I've actually drawn the line in the right area, but still, it hasn't proven. Just because you've got some other people buying it off, it's still not proven that it's going to hold. When you get the higher low, sort of a clear cut higher low, where people start holding it at a higher level, test the level, they start stepping at a higher level. That's a lot more confirmation, a lot, in my opinion, a lot more resilient is probably the word, or a lot stronger confirmation that that's the key level to work off. And then you're really just trying to find the entry and buy on a break higher. Because if that's the case and you're looking at it correctly and you've got the right zone and all that, there's going to be other people doing the same thing. So I hope that makes sense. We'll see what happens with WGX. The other one could be okay. Is it Mount Gibson? Yeah, look at, maybe it's early days, but look the way at Mount Gibson iron, you've had sell off down here, pop back up, lower high, taking out the lows. Now, if you don't take out the lows by a significant amount, so just we'll take one step back. Anytime you're looking at technical, to me, where'd it go? To me, technical analysis is about building a picture. And you're trying to build a bit of a story and why you should buy it, why you should put your money at risk there. So you've got a high in here, got support there. Okay, so essentially support through here. Now, hold a lower high. So you're looking at something like that. So you just go across the highs, held a lower high here, got through support, but didn't get very far. And that, again, was in March, so maybe that's overextended. Maybe it shouldn't have got through that support. Maybe, you should have got that sort of flush lower. But either way, it was finding support again at 60. And then, in essence, you got these two highs. So you got a sort of a range-bound action between 80 and 60. But the fact that if we can start to hold here and chop around here and consolidate around this zone, we might get, and as over time that basically that comes in line. If we start to break up through, was it 75, 78, there could be a move on the cards to the upside, potentially back up to 1. But again, that's going to be linked into the US dollar, isn't it? The US dollar, as long as it sort of heads south a bit, that might start that move, kickstart that move. But either way, I like the way it's sort of chopping around here. Any buys weren't really strong enough to push it out through here and start to work a move up. They weren't. They got sold back down, but then the buyers were actually still happy. Not happy, not thinking we need a breaking out just yet, but they were potentially just thinking rangy kind of action that started to hold up there again. If we can start to hold in here, got a bit of a rejection up around 75, but if we can consolidate through here, we might lift later on, but I think it's just going to take a bit of time. But still, after seeing that big sell-off, big bounce, another sell-off, which took us through these lows, it started to hold up. Then we've got support coming quite clearly at around 60. And you can see that contraction. How much more, just got to ask yourself, how much more contraction could there be before we start to get a move, establishing to the upside? That's the other one. Gone over sort of everything, I think. So we'll probably call it a day there. Anyone that's got SLC, it's a bit of a bummer. We got up to 126.5 today. Got through these highs. Our stop is around break even, I think. But I was hoping there to get to around 130 and we can take a partial. We might get another bounce to the end of the day, but I think this market, it's still quite choppy on the index. Let's just see what the SPY is doing just before we call it a day there. So that SPY, look at that move there. That's what makes your intraday very hard. You got pop up, thumping right. So when the SPY opened, it started to hold in here, straight back up, sold off, straight back up, got thumped again. Then you got another extension lower, straight back up. So if you're looking for weakness here, you sold it in here, bang, you flush straight back out. But if you're looking for strength and you're looking for a higher low, it didn't play it either. It just basically went whoop, straight up, consolidated, took out the highs, straight back down again. So it's very choppy. you're getting levels that are getting triggered on the upside, turn around and they squeeze you straight back down again. So it's like a constant range bound action, just with a couple of major washouts either side. So that weakness there is, that's your day's action. That's an absolute mess in my instance. So if you're thinking that was going to roll, here you're looking quite good. You extended down there and just turn around and squeezed anyone that's got short in here straight back out again, whether they've made a profit, a loss, whatever. It's turn around and squeeze them back out again. And then there was this. This is a 1 minute chart, by the way. Consolidation here. You go, okay, because we've done all that to the downside, we could be rallying back up to 60.53. Would have dragged a few people in with this move through the highs, new highs for the day, bang, straight back out. So very hard going at this stage. So we'll keep an eye on that. The Dow's not really, actually the Dow's popped up from where it opened. Actually, it's probably rallied. That's only 50 points or so. And the Hang Seng, what's the Hang Seng doing for me today? Not a lot. Look at that. Bang, sideways. So that's kind of unusual as well. When you see this kind of a move, you get some sort of profit taken, but it's been consolidating. So that Hang Seng closed in half an hour. So you can see that move up. I think we've got long in here, stopped out here. But just have held, that would have been back in, well, probably about break even at the moment. But either way, that's not the kind of action you would have expected to see. You would expect it sort of drifting lower into the close, but it's getting well and truly supported up at these highs. All right, guys, we'll call it a day there. Thanks very much for joining me. So the next full longer-term stream will be on Monday at 12:30, and then tomorrow will be at 9:40. Next couple of days will be at 9:40, just for 10 or 15 minutes or so. So just remember, if you do like what you hear and you haven't subscribed to our YouTube channel, make sure to subscribe, drop us a like, and help us spread the word. And check out the website as well, tradesetup.com.au. All right, guys, have a great day, and we'll speak to you again tomorrow. See if there's any action, something volatile tonight. It can give us something good to talk about tomorrow. Otherwise, it's going to be much of the same sort of action to talk about, which is not much. All right, guys, enjoy your day. I'll speak to you again soon. Bye.